Precious metals are having a tough summer, to say the least. Is gold reeling under the strength of the dollar, or have investors simply lost interest? Joining me today is Johann Wiebe. He's the lead metals analyst for Thomson Reuters GFMS. Welcome back, Johann.
Thank you very much for having me, Danielle.
So I'm not sure if you know, but I just came back from a conference in Australia where miners were optimistic on gold, but gold prices are still depressed. What do you think the sentiment is in the precious metal space right now?
I think it's very much in line with what you just pointed out. I think the general sentiment in the market regarding precious metals is actually quite subdued. We also seen that if in the year-to-date price performance of the four major precious metals, gold, silver, platinum, and palladium. And remarkably, if you actually compare those four, it's gold that actually has performed the best, of the least worst out of those four. But in general, the sentiment is quite bearish at the moment. That's an understatement, although there is some physical bargain hunting on the horizon as well.
So that said, would you still play gold as a safe haven asset right now, especially since it hasn't been negatively correlated with stocks recently?
I mean, gold still has a safe haven appeal, but it looks at the moment as if the dollar is king. The dollar's been performing relatively well compared to some of the other currencies. Emerging market currencies have been under pressure, and as such, gold has followed that as well. And despite the fact that you have many macroeconomic uncertainties and challenges still present in the market, it seems that investors at the moment seem to prefer the dollar over gold. So to a certain extent, you could question that status. Is gold still an investment hedge or a hedge against the macroeconomic uncertainty? I think it depends on times. At sometimes it probably still is, particularly if we see greater financial distress than we see at the moment. But the strong economic performance in the US is really supporting the dollar as we speak.
So changing gears now, let's talk about the platinum group metals. Platinum falling more than 20% since January. Some analysts suggesting there's just too much supply of it, and hence the price crunch. How do you see it?
Yes, I mean, that's definitely how you would look at the fundamentals of a market, also in precious metals. Platinum has been under pressure for quite a while. Over the years, the platinum miners have dug considerable amount of platinum out of the ground, and as such now we see the result of that. Consumption hasn't always been able to keep pace with it. On the auto catalyst side, obviously in the diesel space, platinum is widely utilized, but that sentiment has been under pressure with the diesel scandal, VW and what have you. And at the same time, the supply that has been above ground over the years accumulating quite strongly. Now, the miners have made considerable commitments in reducing that over the years, the supply, and will have to do more. We see restructuring in the market taking place now with the Impala sale to Sibanye and some other restructuring efforts taking place. But it's not that easy to just cut the supply because the price doesn't allow for it to be there. There's quite a strong political environment involved into platinum as well, which is obviously very strongly mined in South Africa. And we've seen in 2013 what kind of impacts that can have in the market if, for example, some of the miners go on strike. So platinum is going to remain under pressure as we speak, and that supply will have to be cut.
Okay, and just finally, do you think investors should be short the PGMs then if, for example, catalytic converters won't be needed like we had spoken about in the past?
I don't think that's the case. No, I don't think you can use all the PGMs in one go. You'll have to divide yourself between which ones you're talking about. Palladium has been the darling of the industry for quite a while, and despite the fact that it probably declined the most in the recent days, it also is up, I think, $60 as we speak. And palladium has been tight for quite a while, particularly last year. So I guess that market, we believe also, considering the fundamentals, that still has a robust fundamentals going forward, and therefore also be supportive for the price. Platinum, yes, is going to be a different story, and I think there's going to be more pressure on it going forward. So depending on which platinum group metal you look at, you can't just use them all in one go.
Johann, thank you so much for your thoughts today.
You're very welcome.
And thank you for watching. We'll be back tomorrow.